Live from Bloomberg's brand new Mumbai studio, this is Inside with me, Haslinda Amin, a show where we dive deeper into the stories that matter with crucial context and sharp analysis. The first shots of a U.S.-China trade war sapping sentiment in the market. The U.S. Postal Service stops accepting parcels from the mainland and Hong Kong in a move aimed at China-linked e-commerce players. President Trump proposes a U.S. takeover of the Gaza Strip and says he's open to deploying troops, saying it could be rebuilt into the Riviera of the Middle East. We speak to former U.S. General Wesley Clark about Trump's proposal and whether allies, including Saudi Arabia and Qatar, will play along. Plus, the CEO of one of India's largest power companies will be joining us to discuss their plans to go nuclear as the rise of AI and EVs make the world power hungry. Well, the MSCI Asia-Pac Index is in positive territory, but we have caution returning to the market with the tit-for-tat trade tensions between the U.S. and China. Investors cutting risk given the uncertainty now that Beijing has swiftly retaliated against a 10% tariff on its imports. Onshore Chinese markets just back from a six-day holiday, stocks lower after initially rising. Hong Kong is in the negative. CSI 300 index down 0.2%. The Hang Seng lower by 0.6%. We're seeing a bigger, move from HS Tech, currently down by 0.7%. Of course, reaction as the Chinese market comes back after a six-day holiday. Beijing has retaliated against President Trump's opening trade war salvo by targeting a handful of American companies and slapping levies on some U.S. goods. Let's bring in our Chief North Asia correspondent, Stephen Angle. Steve, this was a fairly restrained retaliation. What's a likely strategy from Beijing?
Well, surely Xi Jinping and the leadership in Beijing needed to show some form of strength, and that's why they had a list of these retaliatory measures come out within seconds of that deadline passing yesterday afternoon at 1 o'clock Beijing time, 1:01 to be exact, when those 10% tariffs imposed by the United States on Chinese goods, all goods entering the United States, took effect. So China rolled out its levies, if you will, limited levies on about 80 different products that China buys from the United States. But, you know, it also put a number of companies on its negative entities list, the blacklist, including we're seeing Calvin Klein owner PVH, also a gene sequencing company, Illumina. These two companies have a large proportion of their revenue from China. Calvin Klein owner PVH gets about 6% of revenue from China, 16% of earnings from Greater China. Illumina gets about 8.5% of its earnings from Greater China. So again, it's limited in scope and fairly muted. There was also, we can maybe bring up a graphic to show you the different moves. They also launched an antitrust probe into Google, but that's highly symbolic because Google, if you remember back in 2010, in a highly publicized move, pulled out of China. They also added critical minerals like tungsten to this export ban list that was basically expanded from December, which included gallium and germanium and others. Now it includes tungsten-based minerals and metals. So, you know, again, it was muted because, as Larry Hu from Macquarie says, China has a lot more to lose this time around in the trade war due to its huge trade imbalance with the United States and, of course, Haslinda, as we all know, the continual sputtering of the domestic economy.
Yeah, and this is just a start. We await to see what the other moves might be. Steve, the U.S. Postal Service also suspending inbound parcels from China, from Hong Kong. What more do we know?
Yeah, this is a developing story and very interesting move by the U.S. Postal Service to essentially temporarily ban parcels to the United States from China and Hong Kong. Letters and flat materials, flat envelopes are still going to be accepted. But it was a fairly quick move by the U.S. Postal Service, and we don't know if the private parcel companies like FedEx or UPS will follow suit or have followed suit. But essentially, this follows the Trump administration's fairly rapid move that we expected them to do, but after a lengthy review. But they've already moved on this, and that is essentially removing this $800 de minimis exemption for packages from around the world into the United States of less than $800. So if the value of the package is less than $800, packages could come in without duty and without customs inspection. And those numbers have absolutely mushroomed over the last few years. 1.4 billion packages into the United States in 2024. In the first 9 months of last year, a value from China of about $48 billion. It's double 2022 levels. And companies like Shine and Temu, which is owned by Pinduoduo or PDD Holdings, they have really capitalized on this loophole. And of course, that's hurt Amazon and hurt other e-commerce, American e-commerce members. So that's why the Trump administration has done this. But they've also said, and I think it was Peter Navarro more recently citing the threat of illicit drugs potentially also coming in through this loophole. The precursors for fentanyl, obviously, was the main concern, and that's where these 10% tariffs that the Trump administration imposed across the board on Chinese goods was because of their perceived lack, China's lack of enforcement of the export, the alleged export of those precursors for fentanyl.
Stephen Angle, we thank you so much for that. Our Bloomberg Chief North Asia correspondent in Hong Kong. Well, our next guest says after removing the noise around tariffs, the medium-term picture for a higher dollar index remains strong. Let's bring in Chandresh Jain, Asia Rates and FX Strategist at BNP Paribas Global Markets. Chandresh, good to have you with us. First off, the reaction in the Chinese market as they come back, it's been pretty muted. We see the yuan well supported by the fixing by the PBOC. Very little reaction in the bond market for China as well. What do you make of what we're seeing so far?
Sure. First of all, thank you for having me on the show. Now, we have come to this day, after 4 months of waiting, where everyone was expecting that the day will come when we will have tariff on China. And when we see that market is actually selling dollars on this day. So what's really happening is that market was long dollars massively into the event, building on the expectation of tariffs coming in. But when you look at the tariffs, it's actually not that high as of now. In fact, the Canada tariffs and the Mexico tariffs were removed very quickly. So now the market is actually debating whether it's a negotiation tool or we're going to have a proper tariffs in some of the economies. And that's why market has started to reduce their long dollar position. And that's why the dollar CNH move has been very, very small. Also, the fixing today was very much...
That's right. The fixing today,
so
go ahead, Chandresh.
The fixing today was actually, So the fixing today was actually kept constant versus pre the holiday period. So therefore, again, a signal from PBOC that they don't want currency to depreciate too much as of now.
The question really is how much longer can the PBOC continue to support the currency? At some point, it will have to allow the currency to reflect the fundamentals of the economy.
Exactly. We also think the same way. We think over a period of time, I think PBOC will realize that as tariffs are coming in, they have to let the currency weaken. So in our expectation, dollar CNH will ultimately go to 745 to 750 kind of area. But that will take maybe a couple of quarters rather than today. Additionally, we have to take some assumptions where and when the tariffs will come in. So our assumption is that China will get about 10% tariff, which we have already seen, and will probably get another 15% tariff by Q3 this year. And that will push dollar CNH higher over a period of time.
So we're seeing possibly a weaker yuan against an environment of a mighty dollar is going to be really complicated for emerging markets, especially their currencies. How do you see that playing out, and how do you see central banks and EMs reacting to this?
Sure. So if you think about EM Asia particularly, most of the domestic economies are actually slowing down. Look at Korea, look at China, India now, and even Thailand. Forward-looking growth seems to be slowing down. That means central bank anyways wants to cut policy rates here. Now, if China is not able to export its products to US because of the tariff angle, then it can actually bring more deflation into the Asian economies, because those Chinese products can actually start to come into most of the Asian economies. That means Asian central banks will have to see low growth as well as deflationary effect coming in. That means central banks want to cut policy rates. So we are expecting about 2 to 3 cuts in general from most of the Asian central banks. Now, only 2 to 3 cuts, because when dollar will be rising, in our opinion, in the whole of 2025, because Fed does not cut policy rate, while central banks in Asia cut policy rate, that means Asian currencies will actually weaken against dollar. That's why we have small cycles in most of the Asian economies, just to 2 to 3 cuts.
But the question really is, can emerging market central banks cut rates when the Fed is going to keep rates higher for longer? And for your own expectations, with no Fed rate cuts this year, can they actually move?
Yeah. That's an excellent question, actually. So you need to think about from a core inflation point of view. In Asia, the core inflation is actually very low. So even if the currency depreciates a little bit, it's not going to increase the inflation too much for Asian economies. And that's why the room will be there for Asian central banks to cut policy rates.
Chandresh, which are the best crosses to play against this environment?
I would say we would want to be long dollar in general. So dollar CNH will be our top pick. And apart from that, dollar Korea and dollar Thai baht are our top priorities in this environment. Now, just focusing on, I mean, we have already spoken about dollar CNH, but dollar Korea continues to face outflow pressure in terms of equity market. Plus the corporates from Korean economy, they are actually investing in US. So that's again a dollar buying flow. And on top of that, Bank of Korea will cut 2 to 3 times this year. That's again pushes dollar Korea higher.
Chandresh, we also have to bear in mind what the Fed does and what that means for yields. Where do you see yields headed? 30-year yield probably towards 5%?
That's possible. In fact, we are calling for actually 10-year to stabilize around 465, 470 area in the near term in treasuries, and then starts to come down in second half of this year, because then the market will start thinking about 2026 stories, where probably the tariffs will become a negative for the growth aspect. So the 10-year peaks around 465, 470, and then 30-year also will have a similar kind of a move. It goes higher, but then in the second half, it starts to come down.
Chandresh, thank you so much for your time today. Chandresh Jain, BNP Paribas Global Markets. Well, still ahead on Insight, President Trump says he wants the U.S. to take over the Gaza Strip, potentially putting boots on the ground to secure it. We get reaction next with a former NATO commander in Europe, Wesley Clark. Keep it here with us. This is Bloomberg.
I do see a long-term ownership position, and I see it bringing great stability to that part of the Middle East and maybe the entire Middle East. And everybody I've spoken to, this was not a decision made lightly. Everybody I've spoken to loves the idea of the United States owning that piece of land, developing and creating thousands of jobs.
He has a different idea, and I think it's worth paying attention to this. We're talking about it. He's exploring it with his people, with his staff. I think it's something that could change history, and it's worthwhile really pursuing this avenue.
President Trump and Israeli Prime Minister Benjamin Netanyahu speaking at the White House, where the president proposed a U.S. takeover of Gaza. Well, joining us now is retired General Wesley Clark, Chairman and CEO at Wesley K. Clark and Associates, and former NATO Supreme Allied Commander in Europe. General, good to have you with us. Perfect timing to have you on our show. Just to put it up there, the U.S. taking over Gaza is actually illegal under international law.
Well, of course, it would have to be given. That's the first thing. But Haslinda, I did do the work in Bosnia. I was part of the peace delegation. We had a peace agreement there. Look, you have to take what President Trump says seriously. He's the president of the United States. Some people are dismissing it, but here are the challenges he has to face. First of all, even if Israel agrees, who represents the Palestinian people? Does Hamas? Are they going to agree? What about the Palestinian Authority? And then you have the terrorists that are in there in addition, like Islamic Jihad. And then where will the people go if they leave Gaza? The Jordanians have said they don't want them. Egyptians have said they don't want them. They've got their own issues with population. That's 1.5, almost 2 million people that have got to go somewhere. Are they going to be in a refugee camp? Who's going to build it? Where is it going to be? And then what are the rules of engagement for the U.S. military if it goes in there? Are we just peace keepers? Are we wait to get shot at? We're wearing blue helmets? Or are we taking the role of the Israelis? If so, people are not going to like that. And so there are many, many issues that are very difficult here. This is something that has to be worked over many, many months. And there's already considerable opposition to it already voiced in the region. I'm not saying it couldn't be done, but also consider it against the very limited resources of the United States military at this point. We have about 440,000 in the Army. We're stretched from the Pacific into Europe. And now we have a couple of thousand maybe in the Middle East. Now we're going to put what in Gaza to make sure this works? 20,000, 40,000, and then rotate them. So you have to have 3 times the number that are deployed. Look, there are many, many, many steps to be analyzed before this could be realized. But I do think it has to be taken seriously. If the president says it, I hope the chairman of the Joint Chiefs of Staff, the Secretary of Defense, and the military leaders will, give it a hard look and come back to the president and say, Mr. President, here's what it takes.
General, are you then saying that it is actually a viable option, a viable solution, a viable alternative? He's not just shooting from the hip.
Well, he may be shooting from the hip. I don't know. But, we don't know if it's a viable alternative. It certainly doesn't look like it right now, but with enough money, with enough leadership. But, Haslinda, you also have the Iranian nuclear threat. You have war in Ukraine. You have the challenge of dealing with China and trying to sort through that relationship. My experience with the U.S. government is we're pretty good at handling one issue at a time. 2 issues simultaneously, that's hard. Put this on us, it's even more difficult. So we've got many different issues on the plate for the United States government to deal with right now. This is another one. Look, if this is President Trump's priority, then the U.S. government has to follow it. But I've done these peacekeeping operations before. I know what the negotiations entail. And this is a very, very difficult proposition to make work. And even Benjamin Netanyahu didn't say, oh, yeah, let's do it. He said, it's interesting. We'll look at it. It could change history. Okay. He's on a diplomatic visit to the United States. But we should know that when we put American soldiers in there, if there's fighting, we're in the middle of a conflict in the Middle East, that's probably not sustainable. And President Trump said he doesn't want another war. So it's a difficult problem.
You got to imagine how the Americans are looking at this. The last thing they want is for the American troops to be involved in yet another war, and especially in the Middle East. I mean, is this a politically risky proposition for Trump? How do you think this will be viewed at home?
Oh, I think it'll be viewed as grandiose and probably over the top. But, he's the president of the United States, so people are going to have to take it seriously who are in the Defense Department and State Department. But you know, Haslinda, if this had been feasible, I know the Biden administration tried to talk to President Sisi in Egypt and in Jordan before the Israelis began their operations after October 7th. And there was no willingness on the part at that time to take the Gazans as refugees and get them out of the conflict zone. So they stayed there. And the Gazans didn't want to leave. And Hamas didn't want them to leave because Hamas wanted to use them as human shields. So I don't know what Hamas has to say or the Palestinian Authority. So that's really the first step in this. And they haven't been heard from.
Trump's language around Gaza seems to suggest that he looks at it as a property deal, real estate deal. For someone who has experience in the rebuilding after a war, I mean, do you think he understands what it all entails?
You know, I don't want to, I don't know, but you know, yes, sure. Everybody likes oceanfront, beachfront property, sure. But this is a really difficult place in the world. And, you know, once people start dying and other people start killing them, I mean, it takes generations to get through this. There's so much hatred. There's so much fear. There's so much concern in the region about this. And if you were to simply plop a bunch of American troops in the middle of it, we don't speak Arabic. This is not our fight. This is not something we're going to be good at. We learned the first time when we went into Afghanistan in 2001. As soon as you get in there, somebody comes up to you and speaks in a foreign language and says, so-and-so stole my bicycle. What are you going to do about it? And you don't know what they're saying. You don't know how it's dealt with. You're not part of the culture. There are huge problems at the bottom, not to mention the strategic consent at the top. So, look, he's the president of the United States. Better listen to him. But I've done these things. I can tell you how difficult this is. This is unimaginably difficult.
General, do you think what we're hearing from Trump now will be a reflection of his foreign policy stance? How concerned are you about that?
Well, you know, he's come into office. He's this second time around. He recognizes it's a different world. He likes to deal at the head of state level. He has his staff that supports him, but he makes the calls, and that's the way he likes it. He wants people under him that are loyal. So most presidents, I think every other president, something like this would have floated through the staffing process. There would have been a staff level. There would have been deputies committee. There would have been a principals committee. They would have looked at alternatives. They would have raised the risks, the costs, said, how are we going to pay for this? Where are these people going to go? Who's going to make the calls? Everything would have been coordinated and worked out in advance. There's no indication that that's really taken place. Thus far, he's only been in office for about 2 weeks, and there's so many things going on.
Right.
But, you know, he likes to be in the headlines every day. He certainly captured the news cycle with this one. And obviously, if you could end fighting in the Middle East, it'd be a great thing.
General, we thank you so much for your time. General Wesley Clark, Chairman and CEO at Wesley K. Clark & Associates and former NATO Supreme Allied Commander in Europe. Still to come, we turn our focus to the implications of Trump's tariffs for the likes of Thailand, Vietnam, and the broader ASEAN region. Keep it here with us. This is Bloomberg. Welcome back. You're watching Inside. U.S.-China trade friction is souring the mood in Asia. China's stocks have erased early gains in their first day back from the Lunar New Year holiday. Avril Hong joins us in Singapore for more 6 days of break and, to start off the week, negative territory.
Yeah, I mean, a lot has happened since the mainland markets have been on holiday. We've seen a trade war erupt, the deep-seek narrative taking hold. Chinese gauges at the start looked like they were going to start the year of the snake on the front foot in the green, but then those gains quickly evaporated. The tariff concerns overshadowed. We've seen the retaliatory action from China quite targeted, narrow, some say, so maybe there's room for a negotiation. But in the meantime, this is how how it's looking on mainland markets. Most of the sectors are down. The standout, Infotech, that's doing well. And we're seeing the likes of SMIC A shares. Look at the surge. It's playing catch up to what we've seen on H shares while they've been on break. In the meantime, commodities also reflecting a bit of that risk off, flat on China bonds, maybe catching a bit on the longer end of things. But onshore renminbi, that's also been in focus today. First day back, we've seen that weakness coming through from the get-go. And this is despite a strong fix from the PBOC, a pushback. If you can flip the board and take a look at this chart, just showing you the moves from the start of trade today. And this is, I think, perhaps not unexpected despite that strong fix, given how offshore markets have been performing. It was this catch-up and adjustment that needed to get underway. And I think MLive's Mark Cranfield flagged this best. If you look at the fix, that's really a backward-looking reflection of where the yuan was before the holiday. So this is the picture on the Chinese currency. Of course, this is all going to have implications for ASEAN currencies as well. I think it was the likes of ANZ that said the Sing dollar, Malaysian ringgit, those are the currencies most correlated to the yuan, susceptible to weakness if tariff or trade tensions escalate. For today, there's a bit of a counter current given the slide in the dollar just a day ago after Trump delayed those Canada-Mexico tariffs. They're mostly gaining ground today. Has.
That's right. ASEAN FX under pressure. Avril Hong, thank you. Now, President Trump's China tariff hike could push more production out of China into Southeast Asia, leading to the fragmentation of supply chains. ASEAN faces a challenging path ahead as it navigates these changing global trade dynamics. Our next guest believes Trump's tariffs on China will hit the region hard. Lee Suen is senior fellow at the ISEAS-Yusof Ishak Institute. Suen, good to have you with us. I mean, to be fair, it's not just the U.S. that is practicing protectionist policies. Even ASEAN countries, the likes of Indonesia, are doing the same.
Yes, thanks for having me. And indeed, it's true because you're seeing protectionist pressures mount across the board, right? And this is really a reaction to the disenchantment with globalization. All countries are having to deal with the need to share the spoils of trade with the rest. And a lot of people are feeling left behind. And so there's not a lot of room for governments to be free traders anymore, really. In respect to the heightened tariffs on China, what we might likely see is a flood of cheaper Chinese goods into Southeast Asia, right? Because as demand for Chinese goods crimp in the US, those goods are going to have to go elsewhere. They are likely to go to Southeast Asia. And we see that Indonesia has already enacted heightened tariffs against cheap Chinese goods in order to protect its local industries.
As part of the repercussions as well, we're going to see movements in supply chains. And we've already seen the likes of Malaysia, for instance, benefiting from the chip supply chain. The thing is, Trump is likely to take action on all these activities as well. How do you see the nations in this part of the world getting impacted?
It's going to be tough, right? As what we are also likely to see going forward as the US-China strategic competition moves into the critical sectors like tech, AI, you're going to see a securitization of these industries and sectors. The Biden administration had already unleashed, just before it handed over the reins, an AI diffusion framework, right, that sought to differentiate the world into 3 different trusted tiers in terms of their access to AI chips. We're not sure if the Trump administration is going to implement all of this wholesale, but I think what ASEAN countries can expect is that the export controls on these critical items, semiconductors, AI technology, is going to tighten. And that could mean actually at some point forcing a choice. Whose technology stack do you want to be in? And then you're going to have to deal with increased regulatory scrutiny, and then as well as greater compliance costs.
We know that ASEAN nations benefited from ASEAN +1, ASEAN +2. What happens to that?
I think to the extent that Southeast Asian countries are not in the immediate sort of firing line, that I think there will be still some changes in how supply chains are configured, depending on how the tariffs are levied. But the problem now is that this is a moving target. We're not sure if it's if Vietnam is going to come under the spotlight. It has a huge trade surplus with the U.S., over 100 billion, if I'm not mistaken, and that could actually come under the spotlight. It has been one of the key beneficiaries of the China +1 strategy. So it is a moving target, but I think countries are going to have to adapt to this. ASEAN countries will try to still try to sort of see whether they can be a conducive business environment for other companies to set up shop. But if they're going to be hit with tariffs as well, then there's not a lot of places to run.
Suen, having said that, what is ASEAN's role in the future of trade? I mean, it is an increasingly complex trade environment, but how does it thrive? How does the region continue to thrive?
I think the region can leverage on the fact that it is on track to become the world's fourth largest economy, right? It is a 3.6 trillion economy right now, the fifth largest in the world. And by 2030, it's expected to become the fourth largest economy in the world. And I think this is a lot to play with, to the extent that ASEAN can focus on upholding regional trading regimes and upholding multilateralism. There's a lot of room to grow. It is currently negotiating the DEFA, the Digital Economy Framework Agreement. It has signed an upgraded free trade agreement with China. And there's also there's a lot of room to upgrade and revitalize the RCEP. So I think in the midst of how big powers are turning very mercantilist, there really is a need to just do all we can to uphold free trade in the region. Intra-ASEAN trade right now actually is sadly quite low. It's at about 23%. A lot of room to grow there too, to try and encourage more intra-ASEAN trade.
Suen, how about in terms of foreign policy? Where does ASEAN factor into U.S. foreign policy? We've heard the likes of Marco Rubio saying the right things when it comes to wanting to support the Philippines in the South China Sea, for instance.
I think, ASEAN countries have always said, please don't make us choose between U.S. and China. And we want to be dealt with on our own terms, in terms of our own value proposition to the world. But I think, sadly, the reality is that the Trump administration is likely to primarily look at ASEAN through the lens of U.S.-China strategic rivalry. And this may not be all bad, because at a certain level, it's also true that ASEAN countries do look at a rising China with some degree of concern because of its assertiveness in the South China Sea issue. And so they do want to see a strong America at least make sure that the balance of power in the region is maintained. And so on this score, to the extent that Marco Rubio has said all the right things about continuing to support the Philippines on these issues. This is actually a welcome thing. I think we want to see a strong America. It should also be remembered that actually during the first Trump administration, it didn't do too badly on this issue. It kept up the high frequency of freedom of navigation operations. in the region to sort of make sure that the U.S. presence is continued and felt.
Suen, thank you so much for that. Lee Suen, Senior Fellow from ISEAS-Yusof Ishak Institute. Up next, the CEO of Tata Power joins us after the company's third quarter results beat estimates. We'll also ask Praveer Sinha about India's plans for nuclear energy. That conversation is coming right up. Keep it here with us. This is Bloomberg. Welcome back to Insight, and here's a look at Indian markets just ahead of the open. Futures pointing to a slightly higher open. Ain't too shabby when we have some of the markets in Asia in negative territory, including the Chinese market. Sensex index pointing to a higher open, up 0.2%. Of course, front and center is that Indian rupee against the backdrop of a strong dollar. Currently, the rupee at 87.15. It is lower by 0.1%. It is hovering still at near record lows. Well, India is in the thick of earnings season. Tata Power reporting a jump in third quarter profit that topped expectations and also revealing plans for nuclear power. Let's break down the company's results with our conglomerate's reporter, PR Sanjay. Ain't too shabby, the numbers.
Yeah, we already shared the number, but I think I would like to tell the core business have yielded results, good results for Tata Power. We spoke to a lot of analysts. They're very happy because, on a consolidated, level, Q3 profit was very good numbers for Tata Power. So, and the more important thing is that Tata Power is now emerging as a leader, one of the leaders in the complete renewable chain. When it comes to EPC, when it comes to manufacturing, when it comes to retail, for in a group captives, they're becoming brilliant. And now they would become like Sinosure or become a critical company in the green energy corridors. And when you look at the capex for next 5 years, 60% is for renewables and 20% is for transmission, 7% is for distribution, and 10% is for hydro pump storage. So, they sorted out on the roadmap for as a clean energy leader in a corporate landscape.
And all in line with what Modi has in mind as well in terms of renewables and the green plans ahead. That's Bloomberg conglomerate reporter PR Sanjay. He is staying with us as we bring in our next guest. Joining us now is MD and CEO of Tata Power, Praveer Sinha. Praveer, great numbers. The question really is whether you can sustain those numbers, build on them. How much clarity is there?
Good morning. Thank you for having me on your show. I agree that these are great numbers, but then what you need to see is that this is the 21st consecutive quarter in which we have shown growth. So what is important is that we have very strong foundation, very strong fundamentals, and our core businesses are now kicking in. And all the investments that we are making in the renewable and transmission and distribution have started showing results. And this keeps on improving every quarter. And I do expect that these will continue to grow in the coming quarters much faster and much better. And I think we are on a roll as far as Tata Power is concerned. We are looking at newer opportunities, and I think you will see many new initiatives from us, the Bhutan project, which is a hydro project, and the government's recent announcement on small modular nuclear reactors, which is another opportunity for us to get into that space.
Praveer, we're having this conversation, of course, against the backdrop of a new Trump administration. I'm just wondering, what opportunities and challenges does Trump's, energy policies mean for India as well as for Tata Power?
So as far as India is concerned, I think the demand of power has been growing every year. Though last year was a little muted compared to the previous 2 years, we do expect 5 to 6% growth in power demand every year. And I think we are very well poised for having a whole integrated solution, right from the conventional generation to new energy, that is the renewable and hydro. So I think we are very well poised to cater to this market requirement. And I do expect that in the next 10 years, the demand will continue to grow, and Tata Power will play a very, very important role in this. And many of the new technologies, many of the new things that we have started will start showing results from next financial year onwards.
Thank you, Praveer. It's great to know that on PAT level, in the 21 consecutive quarters, you're doing great performance. And we would like to know, what are the plans for that raising 1 billion by selling your non-core assets? If you could throw more light into it, it would be great.
So as we have been sharing with you that we have ambitious plans for CapEx investment. This year, we've already done in 9 months 12,000 crores, which is about $1.3 billion of investment in our renewable and also transmission and distribution. We have a pipeline of new projects, including hydro projects, pumped hydro projects, and some of the other initiatives in renewables. So I think we are expecting that every year we will be doing something like $2.5 billion of investment. And for that, we will require our equity contribution, for which we will divest from some of the geographies where we are subscale. We have just one plants over there and consolidate more in India, where the opportunities are phenomenal. So I think that's the way that we are looking at future investment plan. And I think we have a roadmap which we will implement going forward.
Praveer, talking about future investment plans, what are your investment plans when it comes to perhaps nuclear energy? We know conversations nowadays revolve around AI, data centers. We heard from the likes of Jensen Huang saying that, to power these data centers, you need nuclear energy. How are you positioning for that?
So I think the government announcement that they will allow private sector is a big step forward. We are waiting for more details. But having said that, I think Tata Power is getting ready to get into nuclear power as and when it gets opened up. We, of course, will have to look at what are the technologies that we can use. We have the Indian technology, the Bharat small nuclear reactors are there. Then there are international players who have very good designs, and we need to get into the commercials of it. Sourcing of fuel for that. And I do believe that going forward, as a part of energy transition, nuclear will play a very, very important role in the country, considering that the demand is increasing and there will be pressure on brown coal to be used in future. So yes, I think this is an area that you will find us working very closely, and hopefully when we meet next time, I'll be able to share more details once the government changes the act and the new policy kicks in.
Praveer, but you've already firmed up plans for PSPs, pumped storage, plants, and I believe that you will be one of the most formidable players. You will have huge presence in that sector as well. Could you throw more light about the plans in that sector, hydropower, pumped storage plants?
Yeah, so we are fortunate that we have many hydropower plants and we have reservoirs over there. So we already have one reservoir, and we need to only now build a settling reservoir and the powerhouse. And we have already identified 2 projects. The first one, the work has already started. The pre-project activities have started, and full-fledged work will start from next one. The second one will start in the later part of the year, that is the 1800 megawatt. The first one is 1000 megawatt at Bhivpuri, which I think we will commission by 28-29, and the second one by 29-30. So we are very well poised to implement the 2800 megawatt. We are now also carrying out our studies on the other few opportunities in our existing reservoirs, and hopefully by the end of this year, we'll come with another 2 set of projects. Bhutan, the 600 megawatt work has already started. It's an excellent hydro project. I was there at the site last month. And we are looking at least 2 more large projects in Bhutan. Possibly by end of this year, or at least one of them will start working. Yeah, with construction work will start in that.
So, Praveer, given all the plans, are you on track for your 2030 target? Is the momentum picking up, accelerating?
Yes, and we are very much on track. In fact, we'll do better than that. I think earlier I had mentioned I'll do 70% of my installed capacity will be clean energy. The present numbers shows it would be about 73, 74%. So I think we are very much on track.
We have pretty much a growing EV sector in India. I'm just wondering, in terms of the infrastructure, charging infrastructure, are they moving in tandem, in line, and accelerating enough to meet the targets that India has set for itself? And what role do you see Tata Power playing?
So again, on the EV infrastructure, we are the biggest player in the country. We have nearly 120,000 home chargers, and we keep on adding every month about 10,000 chargers. We also have public chargers which are there on highways. We have seen, especially in the month of December, the utilization has increased to something like 3.5% from the earlier around 2%. And I do find that the initial inhibition which was there with consumers about the charging infrastructure and using EVs is slowly going away. More number of EV players are coming into the market, and that is also giving choice to the consumers to go for different types of cars. So I think we are all geared up. We fortunately got time in last 4 years to create not only the necessary infrastructure, but also the consumer convenience in terms of the apps that can be provided to them and give them the seamless ability to charge, as also to pay for that through the smart cards. So I think we are all geared up. We'll do a lot of EV charging infrastructure based on the requirements, and I don't think that will be a deterrent for people to go ahead and go for EV vehicles.
Hi, so what could be the capex for next 5 years, and could you give us the breakup for the sectors?
If you can do it in 20 seconds.
Yeah, sorry about this.
Yeah, I think 60% of our capex will go into renewable. Another 10% will go into our hydro. We are looking at 20% for our transmission and distribution, which is actually doing very well, and we were late starters, but I find that
Praveer?
we have picked it up very well. And then
we have to leave it there, Praveer. Praveer Sinha, we thank you so much for your time. MD and CEO at Tata Power and Bloomberg's PR Sanjay. That is it for Insight. Horizons, Middle East and Africa is next. Keep it here with us. This is Bloomberg.